Officially, good evening. Welcome out to the Market Watch Group working sessions. The slide says beginner session, but it's only going to be 1 hour long session. We're going to go straight through. So if anyone shows up at 9 o'clock Eastern, there's nothing going to be here. We're going to be off watching the debate. So, but right now it's going to be an intimate group. The four of us are going to put our heads down, roll up our sleeves, do some work. Everyone else can maybe benefit, right? Last time we did a working session with that created trade alerts was like the foundation for a couple of real nice looking signals. So, make some money, man. That's it. Because as we all know, if it don't make dollars, it don't make sense. Okay. Disclaimers. We're not advisors. We're not brokers. We don't give advice. We don't give recommendations. Illustrative and education purposes only to the platform. That's all we need. We don't need that. Let's get this up here. We'll talk about what today did. Woo, JP Morgan just slapped the financial sector in the face. Pa, pa, pa. 1, 2, 3. All slaps, though. Backhand, forehand. No. Forehand, backhand, forehand again. 1, 2, 3. Financials were like reeling from that. I think there's still going to be opportunity there. But, man, tell you what. August CPI is expected to reflect slower or lower, whichever way you wanted to read it, inflation. Banks drag on Dow. Yes, we just talked a little bit about that. The old Trump economy. I'm not sure I would understand what the old Trump economy is. I will say that what happened in 2017 was very much, in a lot of respects, from a data situation, a continuation of patterns that had been established already by way of jobs, market trends, etc. I'm just saying. What else? Fed cuts rates by 25 on September 18th, twice more. That's what we think. 25, 25, 25. I agree with that. If anything, that's not that. I think only 2 cuts, and one of them they pause and just like, hey, we're going to watch. I don't know. That's my thought. What's keeping the NASDAQ alive and kicking? See, I just, even there, Barron's, it's like there's so much bias dripping from every article. It's very hard sometimes to just get news, right? You have to be very careful. I really find I want it from the headlines. I might click here or there. I want the actual data, so I want these reports. I'm looking to see, like, here I can find out, well, what are people talking about? Well, we're talking about the Fed. We're talking about, right? And then I can know what I'm paying more attention to here. But, God, it's so easy to just have talking heads spitting bias and whatever else. What do we have tomorrow? Everyone's like, oh, do you think the market's going to react to the debate? No, absolutely I don't. 100% don't think the market cares at all. It definitely cares about tomorrow's CPI report. So this is where the expectation is that we're going to get a lower than, right, a slower number. The rest of these are supposed to be the same, at or better, and the market should respond favorably. It's mostly built in. Again, jobs. I don't know why I keep getting errors from these web pages I'm on. If you look at jobs, and there was this whole, there's some weakness showing up in jobs. There's really not. Finish up. Oh, there you go. I see it now. Miguel. Oh, Got to be all engineering on me. Got it. I was just going to update the computer, but I guess that would work too. Turn it off and turn it on. Job weakness or job market weakness. I don't see it. I'm open to it when it starts to show up. If this gets to 250 for 3 weeks in a row or more, then we'll all be like, okay, now we better start thinking a little bit more. But it hasn't. Core CPI PPI might jump a tick. Core PPI drop a tick. I don't seem to have projections from the other two. Really minor consumer sentiment report on Friday. It is expected to tick up. I think it's mostly about the inflation data, right? We can go back in here and see. I actually think that article might be wrong. So we are back to where that's in favor, a little less than 2-1. Then we go there and then we have, you can see there the probability is actually looking for, this is 75, this is 50. And if we go to December, this is 100. This is 75. More people, like substantially more, think. But I think that we've realized this is more hope than think, right? There's no way that this is 100 and, let's see, this is, this is 100 right here. This is 125. Sorry, I was a little off. This is me. This is 3 25-point cuts. But you can see that more people than not think it's going to be more than that. I disagree. All right. Good to see some more folks rolling in. Couple of things. Where's my chart? There it is. First and foremost, Michael, start putting questions that you have for the platform so that as we're just kind of driving around, we can start addressing those. Ooh, UMP. That's something right there. Stochastics turning. Candle above. Gotta tell you, I think that I like it. What's our Heiken Ashi look like? All right, so maybe a stop just right underneath here, 249 target. This thing last time it went 16 points. 16 puts it at 250, 265. 265 is 12 and a half. I think I like this trade. I think I like what we're seeing here. This is one that I'm thinking about. Let's get back out. Let's just go look at a few things, shall we? Let's start with the SPY. A little bit of back and forth today. Sellers came in a little bit. Buyers pushed it back up. All you show is options on your trade tab. Oh, so you're saying like if you were to consider buying the stock, is that what you mean? When you say all I show is options, yes. So if you see here, this is the trade or the option chain. But everything you need for the stock actually exists right up here across this top line under underline. So under underline, you can see the last. So remember that bid ask, you can see when I hover my mouse on bid ask, It's ever so slight, but look at the bottom right-hand corner of your arrow. And you'll see a little yellow box with a little word that says buy. And that's all the time. That's whether you're here, you can see that little box. But if you notice up here, that's a sell, that's a buy. So if I'm like, you know what? I just want to run. What if I were to buy 100 shares of PLTR? And you can see that brings up, by clicking on the ask price, that's a buy. By clicking on the bid price, that's a sell. So if you were going to short the stock. So if I'm buying, and then I can come in and adjust it. So that's all it is. It's there. And if I come in, same thing on the Analyze tab. If I want to analyze a buy, let's uncheck this. And I just go like that. Bam, there it is. It shows up. I can adjust how many. Yeah, perfect. That was an easy one. Thanks for the question. But sometimes that's it. You're just like, why can't I just get a damn stock? I get it. I still have platforms where the first time I'm on it, I'm like, this should be intuitive, but I can't seem to find this. And then you're like, oh, yeah. Okay. SPY. Not only did we pinch, we crossed. So the stochastics was all the way down. We had our consolidation. It's turned. I think that's significant, right? Like we said, what's going to happen? We got some buyers yesterday, and then we got some follow through today. So whatever selling pressure we had, that was it. At this point, the door's open, and you know that you don't get a lot of time. You don't get like, oh, let's wait a few more days. That might be all you get. I would be surprised if anyone put trades on today. If you said yes, I'd be like, yeah, not surprised. Right? Not surprised. Are we going to have alerts for tomorrow? Yeah, I mean, you could put one on for SPY. None today, Miguel said. All right, are you thinking about it for tomorrow? Let's go look at the VIX. That's another big one for us always. That is not the VIX. That is the IX. What is that? I don't know what that is. Is that a thing? IX? The IX. Oryx. VIX. Enter. It wavered a bit, but ultimately you'll notice the low here, 1883. The low here, 1929. Today, 1908. We closed below this low. We closed below this low and this crossed. So for me, that's like the indication that we've now definitely hit the high. These 3 days we were still testing the high. Now we've established it. We're coming down. That means two things. If we're going to get follow through, we need the buyers to come for 2 or 3 days straight and push this all the way back at least to 15. Now, if that happens, you better be in the trade already, or you're just going to be standing there watching the market make a good move. At the same time, what are we concerned about? What is our caution? The caution is that if it puts a doji tomorrow and we have an indecision day instead of a follow-through day, then on Thursday, we have a up day, a bullish day on VIX, which comes with a bearish day on the market. Then we have a confirmed higher low. That is at the very least a hedge signal. At the very least, what am I doing with my hedge? I'm going to go out 5 weeks. I'm going to go out 5% out of the money. And I'm going to buy some puts on the S&P. Here's the deal. They're more expensive now by quite a bit than the last time we looked at hedging when it was closer to 15. But if we get the hedge on at 19 and the thing runs back up to the mid-30s, you're going to be like, yeah, I'm glad I put that on. That first piece is just the initial hedge, and that initial hedge is so that you can go focus on cleaning up all those bullish trades that are going to be starting to get hurt if the market starts dropping. That's what the hedge is for. The hedge is to be there pushing value up into a position while you're going around managing all the positions that are going against you, tightening stops, closing trades that look wrong. etc., etc. So that's what I think, right? Ideally, I'm looking and hoping for 3 or 4 days of bullish momentum right now. Right? Maybe it starts with a good CPI report and bam, buyers, and then more buyers with PPI, and then it carries through the weekend into next week, and we get a nice little swing. The VIX comes all the way back down, into that prior range where we can be like, hey, it's not so bad. Like, that's ideal. We want a bullish market. Right? That's easier to trade. It's better to trade. We're not influenced by that, right? Right. The professor is not overly emotional in that we have a vested interest in a positive outcome. We all want to make money here. It's chimp emotion that we're concerned with, right? It's chimp emotion. Right now, I'm saying that I'm ready to increase my bullishness. Even remember what happened with our posture. Our posture is let's pull that up real fast. There might be a couple people who didn't see it this week. Our posture pulled back, but from 2 weeks ago till now, 1 step forward, 3/4 step back, we're still positive. And then we think to ourselves, it's Tuesday. What is today showing for this week already? Let's go back to SPY. Were we right to stay bullish? Our score dropped a little bit, but you'll notice we have 2 positive days. It's stabilized. That's what we were looking for coming out of this, was stability. It was a little bit, I was thinking stability in this area, but it actually stabilized a little higher, which is even more bullish. Setting some bull trades for tomorrow, I agree. If it starts to turn Thursday, Friday, hedge manage those trades, love it. Great assessment. That's a professorly statement, very proactive, right? If this, then that. Yeah. I like having multiple of those if thens. If it goes sideways, I'm going to give it a few days, and I'm feeling okay that we've got positive stuff, etc. So, cool. Okay, let's get to the watch list. Michael, throw more TOS concerns at me if you have more. Stephen, good to see you. Wilbur, Billy Ray, nice to have you guys. Apple, I still feel like this setup is there. There's been some tug of wars, but the tug of war existing on top of the 50 at a higher low than last time. In what I would identify, there are these 2 days those were kind of outlier days. Those were a little bit of an island reversal pattern right there where it gapped up, sat, and then gapped back down. So I would actually put this more as like resistance. And so this is the handle. I definitely would feel comfortable if the buyers come in trading the handle and then hoping that it breaks so I can look for the cup. I think Apple's still viable. So there is, and Apple being viable, remember Apple's 11% of the NASDAQ, 6% of the S&P. So as Apple goes, so goes the NASDAQ a lot of times. Aflac, you can see we were thinking, but it's still coming down, but still strong as hell. Look, we're barely off the highs. Very strong. Amazon, a recovery. If you stayed in, you're getting paid off for it. Any of it that stayed in, I never broke support. AXP, yeah, I don't know. That's choppy. A put spread. Now, is that a put credit spread or a put credit spread? A bull put spread on AMD. Love it. Okay. AMD. AXP still holding. BAC. Kind of nasty. We really got to see where it shakes out. BK still looks strong. BLDR. I think BLDR looks great. I think that's valid. Whether it's BLDR, Carrier actually signaled yesterday. Caterpillar's still thinking about it. And one other is UNP. Those are all where? Industrials. So there's setup and viability in the industrial sector. Let me know if you agree or disagree, if you're thinking about that. Let me know if you noticed that. So there's Carrier, there's Caterpillar, CL. Oh, it's the defensives are not quite there, but they're very close, maybe a day behind industrials. That looks so strong. And I'm even though I'm like, okay, the market could just be sucking me in, like, you know what, Scott? We're not sure you've learned your lesson. I've learned it. I'm going to stick to my rules. Higher high, higher low. Let's go. When that comes, I'm looking for a trade, whether it's here. CMG, iffy. It's still kind of getting going. You could still think about that one if you wanted to. Costco is another consumer staple that I think has viability. Plenty of time still before earnings. Consumer discretionary, Carvana, no, not yet. And now that it's broken the 50, it's decreasingly on my radar. Or increasingly going to get chucked off the list, potentially. Here's the Dow, pulled back a little bit. Fastenal. It's at the top of the channel, trying to break the channel, so that's got some potential. I would imagine Miguel continued to show patience and held on. At its best position yet, other than if there is negative time decay at stake. I don't know if those of you came on, you probably didn't hear that. So those of you who came on late, my apologies. I didn't make formal arrangements and set up the schedule. But we're going to just go straight through for the full hour, no breaks, no intermissions. And we're going to end at the top of the hour so you can go and participate in the political process by watching the debate. Very exciting stuff. So I don't want to keep you from that. GLD. It's kind of in a basing pattern, but it's a basing pattern at the top. So it's holding on to the strength that it's had. General Motors, another consumer. Boy, I'll tell you what, this was looking primo. And then today, I think it's, the interest in the financing hitting this a little bit. So it could be overblown, but I'll tell you what, that's a lot of selling too. Average volume, 11.5 million. Today's volume, 19 million. Google's at lower lows. There's nothing here for me until this breaks and gets out of this new consolidation. It tried. The best it gave was if you were able to catch this sneaky reversal, and then it went up, and then it just sort of died on the vine, and then just fell on its own weight. Okay. Not this time, Google, but maybe next time. So what do? We wait for it to break the consolidation, get to a new high, wait for it to pull back, high or low, and then we try it. That's all we can do. Goldman got smashed. Woo, ugly, with a capital UG. Maybe even L. 3.5 million on an average of 1.6. Yeah, the dust is in the air now. Doesn't make a lot of sense to be like, I'm going to try to jump into something in financials. What? Why? That doesn't make sense. We don't need to go be rash and hasty when we have plenty. Home Depot, again, signaled yesterday, confirmed today. That was pretty strong. I was thinking about it, but let's go into the for an alert. I mean, we could still think about a continuation trade where I don't give it as much room. Tomorrow it's going to open here around 365 for the Heiken Ashi. So I could enter a trade tomorrow with a stop down in this maybe like 361 range. It's still about 9 points, but 43 to 7, but it's about 35. Yeah, I don't know. Maybe not. I'm not sure that consumer discretionary is as strong as I would like it to be. And if you already have any piece of Amazon left, I don't think you would need more consumer. So far, Apple's close. We've got, BLDR setting up. What time frame is this? Carrier. Oh, no, sorry, UNP. That's the one I liked better. UNP. Oh, yeah, no, BLDR is good too. Sorry, that was a weird. It was like the charts weren't updating correctly. 632. Okay, let's keep going. We're gonna do a trade or two here today. Where were we? Home Depot. ICE. Strong. The exchanges don't care. The exchanges don't care about the financial situation. Still waiting for consolidation to end, though. IWM pulled back. JP Morgan beat up. Ooh. It got beat up. It was ugly. What else? KBH. So KBH actually held up okay. I would have thought with financing issues, interest in financing issues, it could have been a little bit more problematic. But no, looks fine. I would say if you like home builders, that's got some viability to it. Regional banking's holding up better than larger stuff. National banks and large brokers. This is holding up a little better. Coca-Cola. That's close. I think I like CL a little better, but Coke looks pretty strong. Let me know your thoughts there. MasterCard is holding up in regard to financials, but right, think about what you're saying. If you were shopping for a house and you're like, hey, that neighborhood's on fire. But that house there is holding up for now. Like, is that the logic that you are looking to apply from a sector standpoint? I'm going to say no. McDonald's made a little bit of a run and today really kind of crapped out a little bit. Still has viability, but boy, I'll tell you, it ran out of gas. Anybody in that one or looking at that? Let me know. Meta finished flat. 3M, like the other defensives, right? So we have defensives and we have industrials. That's where our core setups now are. We have some technology just a half step behind. Financials we're very leery and reluctant in. Look at Microsoft trying to make a bounce. Look at Micron trying to hold up. NASDAQ. I think as far as a setup goes from the exchanges, I like this setup better than I like the setup for than the setup for ICE because this had a little bit more of a pullback, right? A little bit more consistency in that pullback. I don't know. That's my thought. What do you guys think? But that's viable. There, maybe I would say that is an outlier for financials. Netflix, a little bit of communication services, NVIDIA. Everyone's like, oh, is NVIDIA done? Look, even if it just made a run back up to 130, that's got some viability to it. PGR, insurance still pulling back. PLTR, nice little bit. Took some, keeping some. Yeah. Q's looks okay. RKT, not so much. 20%, nice. I think I can't remember if I was at, maybe I had an increment of quarters, so I think I did 25, maybe. I can't remember now. Love it. SPY looks fine, as we said. TSM, stable. UNP, I like UNP. Only one, so still holding, or did you book it? Book 'em, Dano. Is that the saying? I don't know. USB, holding up. So here's what I would say about financials. Stay away from large banks and brokers. Let's go look at the heat map, actually. Mr. Heat Map. Reload. Whoa. Okay. Holding for now. Okay. So, banks diversified, not good. Most of credit, not good. Capital markets, so brokers, not good. Financial data, fine. Asset management, fine. Exchanges, fine. What else? Look at that. Ford, GM got beat up. Tesla did well. Energy not doing well. Okay. All right. Let's look at the dollar real quickly. Nothing happening there. Walmart, bullish on Walmart. It's like that was your chance. That was the flag right there. But it's hard to trade that when you're at the top of that channel. I didn't do it. I didn't take that one. Let me know if anyone did. Good on you if so. XLB materials looks like it's setting up. XLC looks like it's setting up. Energy is down. That's great from a inflationary standpoint. Financials, higher high, higher low, setting up. Industrials, same thing. Technology trying to come back. Staples, steady. Utilities, steady. Healthcare, steady. Consumer discretionary, yeah, that's a little iffy. Right? That's a little iffy. Yeah. Okay. Comments today said staples and utilities. Look, I like staples. We have a couple of setups that haven't triggered yet. I think that underrepresents the strength of industrials, as well as what was the other one? Industrials and I'm blanking. Oh no, it was. It was industrials and communications. I like industrials more than I like utilities. Staples are fine. Staples are fine. This was on Yahoo Finance. Yeah, that makes sense. That makes sense. Okay. My picks. What am I leaning towards? I would say I like UNP. I like Costco. And I'm going to go back through these one more time, actually. I think it was CL. I'm definitely ready for CL. I think Microsoft has some potential. NDAQ is close. Yeah, Carrier was a day late, in my opinion. I actually feel like I wouldn't be adverse to that, but let's go. Let's start with let's start with the UNP right here. Just a nice, steady, little bit of momentum coming here. Higher high, higher low. What are the thoughts? For me, this is valid. Let's put a target on this. I'm gonna go. It's gonna go low to high. I'm gonna duplicate that, and I'm gonna put it right through here. Yeah, so for me, the stochastics has technically turned, but it hasn't crossed. So it's pinched a little bit. For me, it's enough. Yeah, I'm okay with it. So that's the thought process. Target then is, let's call it 260, 265.75. So I'm going to start setting up in here. Okay. First and foremost, let's get to UNP. We'll probably get one of these done today, but I'll probably put 2 alerts out, I think. I'll come back in and do some work. Let's put this at 265.75. Okay. Let's do a stop loss. I think we could go probably I'm going to say 249.50. I don't want to give it too much room. 249. Yeah, 249.50 for now. We'll see if that gets too tight when we look at it. You can always come in actually and just do a quick like, what's my stock reward to risk? Right? This doesn't have any time value to it. But if I just click on, 100 shares, you can see that it's like, oh, I'm risking 350 to make 1275. That's 3.5 to 1. So I know I have something on my hands. The question is, can I do well with this, with the option? I'm going to go out to October's. The open interest is not fantastic. Right? It's not fantastic. It falls apart, but I think I could still be all right with this. I'd probably be looking in here at the 265. So I'm gonna click on that. Let's just start looking at time. Time-wise, Wednesday, Thursday, Friday. I can give it a week. I don't think we would need it. This says I need until like the 19th. We'll give it a few extra days, at the 25th at the most, half of that. Yeah, let's go to the 17th just to kind of, let's see what that would do to the risk to reward. Now, right away, you can see that my risk here, I haven't adjusted the position sizing. My risk is 1,000 and my reward is 3,800. So I'm 3.8 to 1. When it was the stock, we said it was 3.5 to 1. And we said we hope we can maintain or improve that number. And you can see what we've done here is we've actually improved that. 3.5 became 3.8, even including a week's worth of time. Okay, so I feel like I have something here now. Now I'm going to think about risk. So if you're ever wondering, when you look at, so let's start setting up this alert. The symbol here is UMP. The direction is bullish. The entry range, I would say anything under maybe, let's just say 259.99 is our high end of the range. I want it under 260. And as long as it doesn't get below, let's say 251.50. It's valid, right? No, not 250. Sorry, 253.99. Sorry. 253.99. 252. Sorry, I can't get my numbers right. So we're only giving it about $1.50 range between 251.50. If it drops below that, we're going to want to reevaluate it. But we could, but 252.99. So if it opens around the same place it closed, yeah, it's viable. Stop range. I'd say as tight as 249.50, and maybe I'd go 248.50 below that. Primary target 265.75. That's the big one that I'm looking for. Remember, that's up here. I'd say a nice target 258. So right now we're at 252.50. If we think it's going to go to 265.75, that's about 13 points. 13, 6.5, 259. 259 is halfway, so I'd say 258 would be like, yeah, take, like you did with one, take 20% off if you can, something like that. I mean, this is going to be hard because these are, this is what I was going to show you. Risk. risk. So we'll put 258 for the take profit target. I'm going to say 7 to 9 days. Pretty standard. The stock reward to risk ratio was 252, 58. Let's see. 1317 divided by 308. Ooh, actually that's, did I miscalculate that from before? Oh yeah, sorry, no, I did. I needed to leave that alone. 1275 divided by 350, 3.64. We'll just put 3.6. 3.6, and remember we raised that to like a 3.8 with the option. 3.6 to 1. Volatility index is presently, I'd say it's empirically low. The index is mid, but the volatility assessment is empirically low. What does that mean? It means that it's only 25, so we're not too worried. Empirically, I can spell. Preferred strategy, long calls. We're going to go out to October 24. Oops, sample trade. We're going to buy the 65 strikes, right? No, 265 strikes. 265 strike. Approximate cost, I believe, was $1.55. Risk per contract is approximately $105 a contract. Where's that $105 coming from? Boom, right here. One contract, I'm risking 105 to make 3.75. Or I mean 104 to make 378. So there's my maybe a little less than 3.8, but close. So there, that allows somebody to say, oh, I'm willing to risk $300 a trade. I'm going to do 3 contracts. And then if it gets to there, now I'm going to come in here. You know, I like to set slices to charts so that I can see, right? 1, 2, 3. I didn't put the 258 in, but you can see, yeah, what am I looking for? Looking for it to get up to there. I'm going to have a take profit level here. 1, 2, 3, just like this. Questions? This is fully fleshed out. That's it. I'm going to save this because it's going to go into the alert pile. This is going to be, what symbol is this? UNP 910. All right. I will probably post that unless something crazy happens on the open tomorrow. The opening futures are doing something funky. Then, yeah, I'm going to put that in there tomorrow. So what else will I do? I'll do another one just like this somewhere else. This is what I'm looking to do, is find the bounce, measure previous moves, measure, get a plan put together, make sure risk to reward is favorable, yada, yada, yada. 6 minutes before we wrap up. I haven't even looked. Did we get more people here? David showed up. David said he was going to be a little late. Good to see you. Any questions? Any comments? Any concerns? Any stocks you wanted to look at before we We're wrapping up a little early to go participate in democracy. Not vote, just watch the debate. That's still participating. You're still participating. Give yourself credit. Sometimes you got to force it these days, right? You need a spoonful of sugar sometimes. Yeah, give me your thoughts. I know people are like, they like the alerts because if they like it, they take it. If they don't, they pass, which is exactly how it should be. I might put together this is viable, right? Whereas we might have one that hasn't triggered yet that we want to put on in consumer discretionary, where if all of a sudden they start to move tomorrow, we want to get those locked in because there's some good looking setups there. So those are the two core areas that I'm keeping an eye on right now. Industrials and consumer staples. Industrials, consumer staples. I also think that we better have some technology ready. I think Apple looks good. I think Nvidia looks good. I think that there's viable opportunity out there. So we definitely need to be ready for that. Give me your thoughts. We've got a couple minutes before we wrap up. Not that's coincidental. In this case, yes, Miguel. But it's coincidental. And by that, what I mean is it's not always going to work that way. So in this time, yes, but it's not always going to be that way. It just happens to be the out of the money that had the most. Well, this time it just happened to be the one that was had the best open interest. These were not phenomenal for liquidity. If it were a different stock, I probably wouldn't have gone as far out of the money. So sometimes I'm only a couple of strikes out of the money, but my target's way further out of the money. So like I'm saying, this time it just happens to be that way, but it's not like I come in, look at my target, and then I say, let's start with that strike price. I actually just started with the strike price and the open interest. It's not bad. I mean, if you wanted to make that a rule of thumb where you're like, hey, when I trade out of the money options, I'm just going to put it at, because what happens? If it gets to your target, out of the money became at the money. At the money gets the most amount of pump up from implied volatility in time, right? You'll always have more implied volatility impact and more time at the money than anywhere else. So if an out of the money becomes an at the money, that can be a very advantageous thing. It's just not something that I look for by rule. It's just a coincidence this time. That's what I mean. Hey, it was a shorter session, right? So we have an hour. We didn't take an intermission, so we're a little short. But we got a lot done. We got a trade alert. It's going to come on. This is going to be similar to what I'm looking for something from the staples. It's good to see everybody. Tomorrow morning, we'll be on together, 9:15 a.m., 15 minutes before the market. So let's be ready for that. Let's go watch the debate. I was going to say enjoy. I don't know. Can you? Let's go watch the debate. Let's go hope the debate's informative. Right? Let's hope it's representative of the dignity and decorum we would expect the office of the president. I don't know. Do we have those expectations anymore? Yeah. It's good to see you all. I will see you tomorrow in the morning. Have a great rest of your night. As always, happy trading.